Welcome to another edition. This is Sir Jef presenting correction of errors. All right, I think you are following on what we have been covering for the past weeks. So I want you to get your pen and paper so that we can start. A requirement for this topic is you need to understand double entry. So if your notes on double entry and your knowledge on double entry is not accurate, you find a lot of challenges in terms of getting the appropriate answers and the correct answers, because this is a follow-up on double entry. So please, I advise you to revisit your double entry before you attempt some of these questions. But anyway, for those who have done their homework on double entry, I think let's get to today's topic: correction of errors. There are 6 errors that are required by Cambridge for you to be in a position to state errors that are not shown by the trial balance. Okay, errors that are not shown by the trial balance. Remember, a trial balance is a list of entries. Okay, a trial balance is a list of debit, credit, what entries. That's a trial balance. So that's what we call a trial balance. But this time around, we want to identify the errors that are not shown by the trial balance. Okay, not shown by the trial balance. So in simple terms, we are saying they can say in the examination, can you state 5 errors not reviewed by the trial balance? Okay, 5 errors not reviewed by the trial balance. So take note of the word not reviewed. That makes sense. All right. So let's start. There is error of omission. There is an error of omission. There is error of original entry. There is error of principal, not principal. Principal mind, there's E. Then there's compensating errors. These are the errors that are not shown by the trial balance. Whenever you prepare a trial balance and you happen to have any of these mistakes, it means the trial balance will still balance. That's what will happen. So at the end of the day, the trial balance will still balance when you commit all these errors. All right. Let's get to a section where we cover now which errors are reviewed by trial balance and not reviewed by trial balance. But the question is, how do you describe each error? Let's get to the description of each error. Okay, let me scroll down. Let's start with the error of commission. Right? I think you can see on the screen that this is when an accountant confuses 2 similar names. Okay, an accountant confuses 2 similar names. For example, sales to B Bob were recorded as sales to D Bob. Are you seeing the confusion that this accountant is having here? Sales to B Bob were recorded as sales to D Bob. So we call it an error of commission. Okay, take note. It's error of commission. Please take note. It's possible you might think that maybe because it's Bob, you might think that you have got only one debtor called Bob. Then you think that any sale that was made by the business was going to Bob. But in this case, these names are 2 different people. But remember, they are in the same class. They are all debtors. Okay, another clue is all debtors. So in simple terms, they are in the same class. Okay, so this, when you put your books and you answer your books, Balance with what? Balance. Let's move on to another era of omission. Please take note. Era of omission. Okay, era of omission. Please take note. In this case, we are saying this is when a transaction has been completely forgotten in the books of accounts. Omission is omitted. An invoice, for example, an invoice of 10,000 was left in a garage, then it means no one possibly discovered this invoice and it was completely forgotten to be recorded in the books of what? Accounts. This becomes an error of omission. No one saw the invoice, so it was not recorded. So in simple terms, we have to add the NB. It means this one was not recorded. Recorded at all. Simple. Is it making sense? So it means this transaction was not recorded at all. So let's move on. Error of omission, we are done. Commission, we are done. We are moving on to the error of original entry. Okay, we can just say error of original entry. This is when double entry system is observed using a wrong figure. What's the error here? We are using a wrong figure to do correct double entry. So this is when correct double entry, let me add this one, correct double entry system is observed, but using a wrong figure. Okay, I think this one is making sense. We do correct double entry, but we are doing the double entry in a correct way, but using what? Wrong figures. It's possible. Okay. Right, let's move on to another section. Error of principle. Most of the students, because they are in a private school where they are principals, they think that this error of principle. No, it's called error of principle. Okay, please take note, it's an error of principle. Okay, it means in simple terms, the rules have been tampered. Error of principle. This is when transaction is recorded in the wrong class. The other one was in the correct class. So we're saying error of principle. This is when a transaction is recorded in the wrong class. For example, the purchase of a motor van, which is an asset, was recorded in the motor expense account, which is an expense. Are you seeing the mistake here? This is when a transaction is recorded in the wrong class. For example, the purchase of a motor van. A motor van is an asset, but is recorded as an expense. This becomes an error of principle. I hope you are following. All right, let me move on to the last two of these transactions. Compensating errors. These are errors that cancel each other. Compensating, to compensate when someone steals from somebody, and when saying you're compensating, it means you are covering up that person. Right? Compensating errors, there are errors that cancel each other. These errors, they cancel each other. It's a key term. They cancel each other. For example, let's say sales are overstated. You overstate sales, and sales, in simple terms, sales have which balance? Sales have a credit balance, right? Then you overstate, let's say sales credit balance, you overstate returns inwards, not outwards, okay? You overstate again returns inwards, which are sales returns, right? Let me show you debit like this, right? Sales have been overstated. Likewise, returns inwards, right? Returns inwards have a debit balance. So in simple terms, we have overstated the credit balance, and also we've also overstated the debit balance. So the trial balance will not show this error. So compensating errors are errors that cancel each other. Please take note. They cancel each other. For example, a credit entry was overstated. Likewise, a debit entry, which was also overstated. Okay, let's move on. Complete reversal of entries. We are on the last one. Complete reversal of entries. That's where we are. This is where the correct accounts, these are correct accounts. Take note. Correct accounts are used, but each item is shown on the wrong side of the account. Correct accounts have been used, but each item is shown on the wrong side of the account. So in simple terms, let me try to give you an acronym. In an account that was supposed to be debited was credited. It's shortened. In an account that was supposed to be credited was debited. Maybe it can give you a good clue. This one. Are you seeing the error? An account that was supposed to be debited was credited. An account that was supposed to be credited was debited. An account that was supposed to be debited was credited. An account that was supposed to be debited and credited was debited. This is a complete reversal of what? Of entries. They reversed the entries. They reversed the what? The entries. I think it's very clear. Let me just do a summary of all this, and we see how far you've understood. We are covering errors that are shown, that are not shown by the trial balance. So we are saying errors that are not reviewed by the trial balance. And we've covered error of commission, error of omission, error of original entry, error of principal, compensating errors. And we said error of commission is where they confuse the names. Error of omission, these transactions have been forgotten. Please, can you revise? Then we move on to the next topic. All right. Bye-bye for now. This is Sir Jef.